Okay, everyone. Hello, everyone. I hope and I pray that every one of you is doing good. A very warm welcome to every one of you out there. Greetings of the day. And uh, very important session, all important session regarding your advanced audit and assurance paper has started. I once again need your acknowledgement and need your confirmation that I am clearly audible and visible to all of you. I would appreciate if you can just once again confirm me. Great. So let's start the proceedings of the session. Advanced Audit Insurance Exam Focused Workshop. Okay, so this is a series of 5 sessions, uh, or if I should say, it's a 5 days exam focused workshop. Uh, so, what are we going to target in this workshop? What are we going to target in this webinar? Well, we'll be discussing and we'll try to discuss all the major aspects of this exam, advanced audit and assurance. Comparatively, a very technical paper, a very detail oriented paper, uh, and one of the one of the ACCA paper which is not having which is not having very encouraging passing ratio. So we will be talking a lot about this. We will try to practice as much as questions as we can. And I will also need your support. I will also need your involvement because the live sessions, the webinar sessions, the workshop sessions, uh, these become most successful when there is a two-way interaction. When your input is also coming our way. Okay, so let's see the agent of this session. Okay, before moving on, let's have some planning of the days remaining and what we can achieve in these days. So today we are standing on 1st of November 2023, 1st of November 2023, and we have one whole month still remaining for preparation of this exam. One whole month and few good days. So is this time enough for us for preparation of this AAA exam? Answer is yes. We have more than enough time for preparation of this paper, provided that you give some respect to this paper, you devote sufficient time for preparation, you devote sufficient time for practice, you devote sufficient time for your conceptual clarity. And we are here to help you out. We are here to facilitate you whatever problem you face in this exam. I'll try my level best uh, to help you out in all possible ways I can. Okay. So let's hope and pray that together we can make this paper a success, inshallah. Okay. But I need commitment from all of you that yes, we are determined. Yes, we are focused. And yes, we'll give our 110% to pass this paper. Because your commitment is the key to success. Your commitment matters the most. So every participant, every participant in this session should raise their hands or at least write in the chat box, acknowledged. Everyone. So that I can see the firm commitments from everyone. I can see the hands raised by everyone. Good, good. More hands, more hands. Great. Perfect, perfect. So, uh, Let's start the core discussion with a prayer that may this session be the most fruitful for you and maybe help you out to the maximum in passing this paper. Okay. So, okay, this is just an introduction about myself. Few of you know me, few of you not, but I'm tutor of AAA and I also teach SBR as well. I have been teaching these subjects since last many years. I myself am practicing auditor, fellow member of ACCA, fellow member of ICAP, Institute of Chartered Accountants of Pakistan. And at the end, my contact number, contact information is also given. So you can contact me as well. No worries about that. Okay. So the session agenda, 5 session series. What's the agenda? What are we going to target? First of all, we are going to discuss about AAA. What is AAA? Well, I'll not talk much about it because you already know what is AAA. You are the students of AAA, and now you are nearing the exam, so you know very well what is AAA. Overview of the syllabus. We'll see what is in the syllabus. Which are the core areas, which are the key areas which the examiner is usually focusing in every attempt, and how can we target those areas? We'll also see paper pattern in key areas, as I just told you. Passing ratio. Passing ratio is usually not very encouraging. It's poor passing ratio, 30 to 34% usually. We have 20 professional skill marks, and that's a good news. And for these professional skill marks, you don't have to do much. You simply have to follow the tips of the tutor. You simply have to follow the approach of the tutor. And if your answer, if your solution, if your approach is in the right direction, these 20 marks will automatically flow in your kitty. Okay. Reasons of failure. What are the reasons of failure? We'll discuss the reasons of failure, not because you're going to follow these. The reason, because you need to avoid these. Are you getting this? We have to learn from the experiences of others, and we are not supposed to experience everything ourselves. Okay. So reasons of failure are very important to discuss so that we don't commit these blunders. Okay. Then we'll also be discussing conceptual areas, key conceptual areas. We'll be revising those areas before we move on to our practice sessions. We'll be discussing key exam techniques in every area. And then our core objective will be practice, practice, and practice. Okay. Okay, so this is the syllabus overview, and I'll just be skimming through it. I'll not be spending much time on it, but it's particularly important that we skim through the syllabus area and we simply highlight which are the key areas. Okay, learning objective A, regulatory environment. This learning objective is not very important from exam perspective, not a very technical one, and not very important from exam perspective. When I say it's not very important, it doesn't mean that it cannot come up. It comes up. An examiner do test from this area, but this is not a core examinable area. This is a supporting area, supportive area. And yes, we'll have a quick glance of what is in it, what you should know, and how is it tested. We'll look at it when we'll be covering the past exam papers. But once again, it is an easy area. Money laundering laws and regulations, non-compliance of laws and regulations, because non-compliance of laws and regulations can be tested in any of the question. Okay. Professional and ethical considerations, a very key examinable area, core area. So as I told you that this area is not very examinable. Yes, bits and pieces can come up. Usually laws and regulations within this section, laws and regulations, of non-compliance of laws and regulations. This is usually tested more. Okay. Professional and ethical consideration. This again is a very important, very important learning objective. Professional and ethical consideration. Usually it is touched by the examiner in every attempt. You'll see the questions flowing from this area in almost every attempt. So obviously we cannot risk keeping this area to the weaker side. We should know what are the ethical threats. We should know how to draft our answers, and we should know what are the safeguards. Because professional and ethical considerations is such a question, which is a very frequent question. Okay, and we'll see that. Then comes fraud and error. Again, fraud and error. This is an area which examiner tests in multiple questions. It's also linked fraud and fraud related events. A bit of flavor is also there in the forensics investigation, but still we cannot say that this is an unimportant area or unimportant standard. Yes, it is tested. We should know the relevant areas which are tested. Professional liability, not a very frequently examinable area, but it's a good area to know. Quality and practice management, very important area. Very important area. Examiner asks from this area very frequently. Okay, so we'll be looking at this area. What are the key elements? What should we know? And how should we utilize our knowledge in questions? Within the quality and practice management, within quality management, engagement quality management is particularly important. Now, I'm telling you the important areas within a section. Okay. So engagement quality management is particularly important within quality management. Then advertising, tendering, and obtaining for professional work and fee, that's not frequently tested. That's not an important area. But yes, the professional appointments, very frequently tested area. Planning and conduct of the audit. This entire area is very important. Very important. This is the heart of your examination. Around 50% of your exam paper revolves around this learning objective, planning and conduct of the audit. Okay. Completion, review, and reporting. Very important. The question number 1, which is a 50-mark question, is set around this planning and conduct of the audit. And usually one question of 25 marks revolves around this learning objective. Okay. So we know what is in it. We will be discussing it. Planning and conduct of the audit, everything relating to audit of historical financial information, right from the planning, evidence gathering, planning, risk assessment, evidence gathering, testing, group audits, everything else. Completion, review, and reporting. Completion, review, and reporting contains audit reports, subsequent events, going concern implications, reports to those charged with governance. That's the closure phase of the audit and the conclusions being reached by the auditor. Which sorts of conclusions are there? Which types of conclusions are there? What are the modifications? What are the additional paras? So we will be having a look at those. Then we have other assignments. Now, what are other assignments? Obviously, this is something different from audit, but very much similar to what we study in audit. We apply similar sort of procedures in other assignments as well. But yes, the level of assurance differs. Our risk of the engagement differs. The nature of assignment differs. But if we have properly studied what an audit is, if we know what are audit procedures, if we know how to draft audit procedures, then these areas, particularly not very technical, shouldn't be very technical for us, because things will be pretty much similar, which will be applied in this section as well. Okay. So audit related and assurance services, specific assignments like due diligence, frequently tested, because one of the 3 questions will be based on other assignments. Okay. Review of interim financial information, prospective financial information, the future financial information, the cash flow forecasts and profit forecasts and things like that. Okay. Then we have the area of forensics investigation, the fraud investigations as well. Okay. audit of performance information in public sector, social environmental information, other assignments, and what should be the reporting on other assignments. Then you might have current issues relating to the auditing industry, for which the examiner usually sets a recent article. You might have a current issue. Professional skills, one of the learning objectives is professional skills. And the good thing is that this is not a technical learning objective. This is not a technical learning objective. This is a learning objective which is quite positive from a student's perspective, the professional skills. Okay, now what are these skills? We'll be talking about these skills as we go on and attempt any particular area of the exam, any particular question of the exam. And then I will particularly focus that which professional skill is having a role play in this question. How can we attack the professional skill marks which are hidden in the question? Okay, so we'll talk about communication skills, analysis skills, evaluation, professional skepticism, commercial acumen, and we'll see how to grab these marks. Okay. Then we have employability and technology skills. Now, again, this is not a separate learning objective, but whatever we do in CV practice platform, the tools we use, the exhibits we use, the calculator, the response options. So everything relating to the technology which we use while attempting the examination is basically reinforced in this learning objective, basically. Okay. Okay. So this is the triple exam pattern. Every one of us know this pattern, but just a reiteration, just a recap of it. Question number 1, 50 marks, 40 technical marks, 10 professional marks. Okay. Question number 2, 25 marks, 20 technical marks, and 5 professional marks. Question 3, again, 25 marks. So what is the usual format? Question number 1 usually is based on the planning stage. Could be an existing or a new client. Question 2 or 3 could be interchanged. One question will usually comprise of completion, review, and reporting, and the other will comprise of other assignments, current issues, or other open-ended questions. But what is the key thing? Or what is the area which is the pain point for students, I should say? Or in other words, I should rephrase my sentence, which area can benefit students the most if they master their skills for the examination? So if the students master these exam techniques, if the students can follow these exam techniques, if the students can properly apply these exam techniques while drafting their answers, they can fetch the maximum marks available in the question. There are high chances of scoring the maximum marks. You will be targeting maximum pickings available in the question. So technique, exam technique is very important. If you can learn exam technique in AAA paper, you are through, you are pass. Inshallah, hopefully. So what my focus will be, what my objective will be, I'll try to make you learn these exam techniques. I'll try to make you apply these exam techniques, because if you can apply these exam techniques, the professional marks will automatically flow in your kitty. There will be less chances of you leaving any aspect of the question unexplored. Are you getting this? So techniques. We need to work on techniques. These sessions will focus a lot on techniques, because this is what matters the most when you are practicing a question, when you're actually attempting a question, typing an answer. Getting this? So risk assessment, what are the technique-based areas? What are the core areas for which we have techniques, established techniques? Okay. When you talk about question 1, the planning stage question, risk assessment question, business risk of material misstatement. We have an exam technique for both of these types of questions. So we have to follow this exam technique. We have to apply this exam technique. We have an exam technique for ethical, professional, and quality management matters. Okay, I'll show you what that exam technique is. we have an exam technique to draft procedures and evidence. Okay, so we will learn the exam technique to draft procedures and evidence so that if the question comes relating to procedures, students can get maximum marks. And I'll show you the scripts of these students who have attempted the mock exams and passed. I'll show you their scripts and I'll show you how poor the students are in drafting audit procedures. How much students lack in drafting audit procedures. Here I will emphasize one fact. Here I'll emphasize one need. Dear students, please do appear for the mock examinations. Please, wherever you are studying, do appear for your mock examinations. Because what I have personally experienced, when students actually attempt their exam in a time-bound environment, in an exam type environment, they're likely to assess in the finest form. And when they get the feedback of the tutor, I check the mock exams of my students myself. Okay. So I try to mark every question myself, whatever comment, whatever feedback I can get, I do give. Okay. Students might say that I'm checking this a bit harsh, but this is for you to identify your mistakes. Are you getting this? This is for you, for your betterment. I'll show you the marked script, and you'll see that how important it is. How important it is. Okay, to attempt the mock to get your mistakes rectified. Because the students always think that they are drafting masterpiece when they are drafting procedures. But mind my words, they're drafting rubbish. Literally, they're drafting rubbish. Okay, reporting questions. Which opinion para will be used? How will you apply the technique? Which additional para will you be opting in which scenario? We'll be discussing this. Okay. Procedures and evidence can appear in this type of question as well. So procedures and evidence, ethical considerations. This is such type of requirement which can appear in any question. This is not a question bound requirement. It can appear in any question. Hearing this, ethical and professional matters. Ethical and professional and quality management matters. Okay. Other assignments again, one very typical question which the examiner usually asks, and you will see in multiple attempts: acceptance considerations, audit acceptance considerations, non-audit assignments acceptance consideration. Let me show you the exam technique. If you can practice this exam technique, if you can master this exam technique, this is the sample exam technique. That when you are thinking of acceptance considerations, when you are attempting the question relating to acceptance considerations, then this chart should be in your mind. If this chart is in your mind, if this technique is in your mind, there are high chances that you will pick all the necessary information in the question to address these pointers. Are you getting this? So exam technique plays a very important role, a very, very important role in gaining the maximum marks. Okay. I hope I've made it very clear and very focused. Okay. Ethics. Okay. Then there comes the procedures for non-audit assignments. So see, the procedures are not very important from audit question one perspective, but the similar technique to draft procedures apply in non-audit assignments as well. Okay. So once you know what is that technique, then we can also apply those techniques in non-audit assignments. Procedures and drafting technique, the approach to draft procedures will not change. Okay. There could be any knowledge areas. Knowledge areas are not tested much. But yes, there could be any question in which the answer may require you to recall some knowledge. We will look at the past exam trends and analysis when we'll be practicing the questions, so don't worry about that. Okay, I'll try to focus the reasons of failure. I'll try to discuss the reasons of failure. Why I'm discussing these reasons? Because when we are going through questions, if you're going through the revision, students should ensure that these reasons should be avoided. These reasons are avoided. Okay. Number one, selective studies. So obviously, since this is a professional paper, so every one of us know this very well that we should be covering the syllabus thoroughly. We shouldn't leave any area. We should target most of the areas. Then, very important, very important point, very important point. Okay, I hope you can see this pointer moving on your screens. Can you please confirm me? I hope you can see this pointer moving on your screens. This laser pointer. Can you please confirm me? Great. Okay, very important, very important. Poor memory from SBR, poor memory of key accounting standards. This is the area where students usually lack most. You are unable to recall the accounting requirement. Now, what is that technical in recalling a simple accounting requirement? Student miserably failed to draft it properly. I don't know why. You are aspiring to become accountants. You are aspiring to become accountants. And if you are not able to recall the accounting requirements, then how are you assuming to get maximum marks? And here, the accounting requirements are not the detailed technical requirements. These are the broad requirements. These are the key requirements. These will not require you to remember the nitty-gritties from your SBR paper. No. But yes, you're still expected to recall the pillar requirements, the key requirements of every standard. Okay. We'll try to refresh the key and important ones. Okay, Sailor, you have any question? You have raised hand. You can type in the chat box. Okay. And once I'm done with the discussion of reasons of failure, I'll see your questions and respond. So let me finish this and then I'll respond. You just type your question in the chat box. Okay. Poor memory from SBR and key accounting standards, lack of paper technique. As I told you, I'll show you the technique. I'll make you learn the technique, and then you should apply that technique. Okay. Application of that technique is very important. Lack of practice. You have to practice. See, I can teach you. I can make you understand a concept. I can show you, I can demonstrate you how you should draft. I can demonstrate you how you should apply the exam technique. But practicing and re-practicing is your cup of tea, is your domain. I cannot practice on your behalf. Are you getting this? I cannot appear in the examinations on your behalf. You are the one who have to practice. If you are thinking that taking the session will do everything for you, no. You have to do it with your own hands. You have to practice with your own hands. And mind my words today. Mind my words today. You can write it down somewhere. You can write it down somewhere. Those students who can appear 3 or more past exam papers in time-bound environment. If you can do 3 exam simulations, 3 or more, at least 3. You can do 3 exam simulations. Your chances of passing will reach 80%. 80%. At the moment, your chances of passing are, what's the usual passing ratio? I'll say that might be 34%, 35%. And if you do 3 exam simulations, at least, more will increase the chances. Your chances of passing will become 80%. 34 to 80. And there will be very few students who would be actually implementing this advice. Very few. Poor answer planning. I will show you how to plan. We'll plan. we'll plan the answers. 1/4 time should be spent in planning. 1/4. So we should read the question well. We should plan the answer well. If we are good in planning, we will be good in execution. If we fail to plan properly, we will not execute it properly. Mind my words. Poor writing skills. How can it be improved? Practice. Unable to adopt mindset as per the given case. How to overcome? Practice. Failing to understand the requirement, read it carefully. Don't get pressurized from the exam environment. Read the requirement, understand the requirement. Because if you read the requirement quickly, if you fail to understand it properly, your entire planning of the answer will fail. Failure to understand the marking scheme, very important, very important. You should know how much marks are available for what. If you're writing a 3-liner para, how much marks are you going to get? What are you writing? Breakdown of the marking scheme. For example, in audit risk question, there is a breakdown of marks. You'll be getting marks for materiality. You'll be getting marks for identifying the risk. You'll be getting marks for identifying the relevant accounting non-compliance. You'll be getting marked for proper application. You'll be getting marked for risk impact over and understatement. You'll be getting marked for identifying it as a significant risk or not. And if there is a relevant trend given, you have to link it with it. If you can tick everything, so available marks in front of every trait of the answer will complete your marking. Getting? So we will see the marking schemes as well. Unable to comprehend issues, thought process. Again, this will come through practice. Comprehending the issues. There have been lots and lots of AAA exams which have been held in the past. You have a lot of practice material. Almost all the possible issues, almost all the complexities, almost all the scenarios, examiner have already asked in the past questions. If you keep on attempting those, if you keep on practicing those, you'll become champion in comprehending the issues. Poor typing speed, practice more, so your speed gets increased. Okay? Now, this is again your domain. My typing speed may be low, but I am not required to appear in examinations. I've already passed mine. Okay? So if my speed is low, that doesn't mean that you should also type the same speed. Because when I'll be attempting, I'll be having loud thinking with you, I'll be discussing with you. Okay? So your typing speed should be much higher, much more than mine. Okay? Poor time management or running a specific part. Don't overrun on a specific part. Because every part has its time allocation. And when can this happen? When you have a good exam practice. Ignoring technical articles. If you ignore technical articles, that can be a problem. But the good thing is, if you cover from Study Hub, Students Study Hub, the good thing is they've already incorporated the technical articles in the Study Hub resources. Okay? Examiner reports are particularly important. But what you shouldn't do, okay. Examiner reports, what students do usually at the marking scheme, specifically marking scheme, what students usually do? They read the question, they think of the answer, and then they look at the marking scheme. They make few rough bullets, and then they open the marking scheme and they try to match the bullets. Well, you are not here to make bullets. You are the students and you have to draft the complete answer. And what students then think? Oh, my 80% bullets are matching, so that means I'm on track. I'll pass this with ease. Unfortunately, this is a deception for you. You're not going to pass with this approach. Don't do this. Don't do this. You're not here to make the pointers. Where the students struggle usually, they struggle in explanations, in evaluations, in giving the reasons. Okay. Examiner reports. Examiner reports are also very helpful because examiner reports also tell you that where the students are lacking, what mistake are they doing. And there are high chances that you might also be doing the same mistake. So these reports will highlight the problems in the common answers. Okay. Now I have few questions. I'll be addressing those questions and then we will move on. Okay. So there is one of the question, Sayyida Mutayyiba. I have two problems. One is lack of paper technique and other assignment is a problematic. Other assignment is a problematic area. Okay. So hopefully these sessions will help you a lot in both of these areas, paper technique as well as other assignments. So when we will be doing the question for other assignments, you should be very much active. Okay. Which is the best resource to revise the standards? Okay. Sayyid Aliyan, I'll recommend Study Hub. You have a Study Hub, you have a Study Hub access for all the subjects. Go there, SBR, there are summary for every topic. You can revise the summary. If you wish, you can have a detailed go through at any standard, but that's not particularly required. But yes, you can revise through the summaries of every standard which are given at the end of every topic. Study Hub, ACCA, SBR. Do you have to revise audit procedures from AA, although I have done it? Oh, okay. As far as audit procedures are concerned, we will learn the technique to draft audit procedures. So don't worry. Forget about AA. Forget about AA. Forget about AA. We are focusing on AAA. And for AAA, it's good if you have the knowledge of AA. Obviously, every knowledge is useful. But for AAA, I'll try to guide you that how can this procedure drafting become easy for you? How can this get easy for you? Okay. Because I want to make things easy for you at this stage. I'll try my level best. And inshallah, we'll be able to achieve many objectives, whatever I've discussed with you. Okay. So any other questions? If yes, please put your questions. Otherwise, we'll be moving on. Okay. Don't worry. We will see how to apply the standards as well. Okay. So here are a few sample exam techniques. So I'm not going through these sample exam techniques at the moment. So what I'll be doing is that I'll be recapping every area. I'll be recapping every conceptual area. And then we will be discussing the exam technique of every area. Okay. Be it business risk, be it ethical consideration, be it risk of material misstatement, be it any technique, we'll be recapping the area and then we will be revising the relevant exam technique. Okay. Okay. So let's just quickly go through the regulatory environment. As I have already told you that there is not a very technical discussion involved in this learning objective of regulatory environment. So we will be quickly going through it. Okay. As far as these basic discussion is concerned, audit, objective of audit, assurance, elements of assurance, you already know this, so I'll not be spending any time on it. So I'll directly go towards few important things. Okay, we know who are the audit regulators who regulate the audit profession. We know what is corporate governance and good corporate governance. We know what are the advantages, main functions, and disadvantages of audit committees. Money laundering, yes, money laundering has been a topic which has been tested in past, and yes, it can come up in examinations. We'll quickly skim through what is money laundering. What is money laundering? Money laundering is the process of hiding the origin of the funds. You have questionable proceeds. You have criminal proceeds. And obviously, you don't have the trail of those proceeds. So the perpetrator will try to look that these proceeds have been generated through a clean source, through a legitimate source. So the proceeds of crime, proceeds of the breaches of law will be channelized through multiple processes to make it look legitimate. Okay, so this is what money laundering means. So process by which criminal attempt to conceal the true origin and ownership of the proceeds generated by illegal means. Okay, so the money from tax evasion is also uh, basically is an attempt to launder money. So money laundering involves few processes. First of all, it involves introducing funds into a business, probably in small cash amounts, so not to our own suspicion. They place that fund so that they can launder it, they can clean it. Okay. Possible methods, changing into different currencies, taking different countries, and things like that. Then layering, hiding it, creating a complex chain so that no one can trace the true source. No one can reach your neck and you can hold it accountable. Okay. So moving the money around, creating a complex chain, put it in a company, showing fake sales, getting into another company, taking dividends and things like that. Integration. And at the end, after doing this entire dirty process, taking out the money laundering. Okay. What are the legislations? What are the offenses? Money laundering is an offense. Tipping off is an offense when you are auditing. Since you're an auditor, you'll be looking at the records. You'll be looking at the financial records. So there might be an indication of money laundering. The client might be gaining illegal proceeds. Client might be receiving illegal funds. Client might be involved in fishy transactions. Don't tip off the client. Don't give them an indication that you are suspecting their money laundering. So what are we going to do? Okay, we'll see in duties. But what are the offenses? For example, if I am running a firm, and I don't set up any procedures to identify the money laundering and to report money laundering. Okay. What are my duties? Client due diligence. I should know my client. I should have done the background check. Appointing an MLRO in my firm. We've appointed an MLRO because this is the requirement of the ACCA. Money laundering reporting officer. One of the partner in our firm is an MLRO. Okay. Staff training. So we do give trainings to the staff that this is how you should spot on money laundering activities. If you find out any such fishy transaction, do let us know. Report it to MLRO. And if MLRO thinks appropriate, he will report to the external authority. Getting? Client identification processes, obtaining the ID cards, the passports, the details, and things like that. Not a big deal, not very technical. Money laundering. What is the indication of suspicious transactions passing through several companies? Now, there may be a question in the examination. This is where the question can test money laundering implication. You may be given a scenario. Examiner is not saying that identify the money laundering offenses. But when you are identifying risks, when you are identifying misstatements, when you are trying to identify the non-compliances, this may help you out a lot. Okay, transaction that pass through several countries without any obvious reason. Multiple transactions of a small nature. For no reason. Complicated group of companies and the transaction is passing through complicated group of companies for no reason. new company exists, but not used straight, then what's the reason? Is there any illegal channelization of funds through that company? Might be. Tax investigations going on. Tax non-compliance is going on. Okay. Indication of money laundering. Client making facilitation payments. Client having political connections, bribes, cash-based transactions. And what's the problem with the money laundering? This is the problem. There comes a concern that if we report money laundering offenses, is it a breach of confidentiality? Answer is you should recall the principles of confidentiality. We will be recalling those principles, but there is an exception. There is an exception. If there is an issue which needs to be reported to the regulatory authority, we should disclose this. Okay? We should disclose this. Very important standard. Revision of a very important standard. I hope that everyone is active. Everyone is active. Please raise your hands if you are active. I want active audience. Everyone, great. More to raise hands. Great. Consideration of laws and regulations. Now, this is a standard. This is a standard which comes up in the questions, and the students don't even realize that this standard can have the role play. Here, you are required to identify the non-compliance of laws and regulation and make it a point. You can get an easy mark for identification of non-compliance of laws and regulations. But for that, you should know this is standard. And if you ignore this is standard, you may lose that 1 mark or 2 mark available for identifying the non-compliance of laws and regulations. Getting? Okay. So very important thing, very first thing, which is very important thing. You are an auditor and you are auditing a financial statements. And you come across a non-compliance. Is it the primary responsibility of auditor to identify the non-compliance? Answer is no. It's the primary responsibility of the directors and managements to ensure that entity complies with all rules and regulations and to establish the policies and procedures for detecting non-compliances. What is the duty of auditor? Similar response which we give when we say it about fraud. Auditor is not responsible for identifying the non-compliances of laws and regulations. Our auditor is not primarily responsible to identify the fraud. No. Auditor is only there to obtain a reasonable assurance that financial statements are free from material statements. There could be many laws and regulations, operational laws and regulations. Auditor is not required to check the compliance of every law. Yes, we might come across with those laws which are impacting the financial statements. For example, taxation laws, usually. Are you getting this? For example, if you are auditing banking companies, there are various requirements, statutory liquidity requirements, reserve requirements. So those which are linked with the financial parameters, usually those laws and regulations we are required to know. Okay, so there azan in the background, call for prayers. So I'll be taking 1 minute silence break. The auditor is responsible to obtain sufficient and appropriate audit evidences, specifically for those laws and regulations which have direct effect on determination of material amounts. Direct effect on determination of material amounts. Okay, let me. Okay, direct effect on determination of material amounts and disclosures in the financial statements. Not all laws and regulations, no, but the material ones, and specifically those which have impact on the financial statements. Are you getting this? Okay. And they'll perform their related procedures. They'll perform the procedures relating to the materiality, which may have material impact on financial statements, which may have material impact, material impact, material impact, material impact on financial statements. Not everything. Not everything. This is not auditor's responsibility. And to respond appropriately if the non-compliance is identified. If during their processes, during their procedures, any non-compliance is identified, they'll do the needful, whatever standards suggest. And what are the procedures? The normal procedures. The normal procedures. They will obtain the understanding. They will, first of all, they'll obtain the understanding of the legal and regulatory framework. They'll inspect correspondence with relevant licensing or regulatory authorities. Because usually they send you the notices, they tell you about the non-compliances. They'll inquire the management if there are any non-compliances with laws and regulations. If the result of any audit procedure suggests that there might be some non-compliance, for example, you have paid a penalty, the client has paid a penalty, and you have vouched the penalty, you have vouched the penalty. For what? For what this penalty has arisen? Non-compliance, not compliance. Written confirmation from directors that we have disclosed you all non-compliances. Okay? Taking legal confirmation from the lawyer as well. This is also one of the procedures. Inquire the management of the penalties to be imposed. Inspect correspondences. Legal department, see. Inquiry from the legal department. Board minutes. If there has been any non-compliance, board of directors might be discussing this in their meetings. It's inspecting correspondences from authority we've already discussed. If the non-compliance has been identified, what to do next? What to do next? Very important. This slide is very important from exam perspective, from your answers perspective. Reporting the non-compliance. To whom they should report the non-compliance in further action, in request further action. First of all, report to the management. They'll take the action. They'll take the action. They'll rectify. They'll do the needful. If the non-compliance is such that it is having impact on opinion, impact on numbers of the financial statements, and it's not getting rectified, it's not getting incorporated to shareholders, consider the implication on the audit opinion. There may be a need to even emphasize something. We'll see emphasis of matter to shareholders in audit report. Third parties. There might be a need to disclose some non-compliances to the regulator. For example, I'm just giving you an example. For example, it's a toy manufacturing company. It's a toy manufacturing company. And if that toy manufacturing company is using a chemical which is prohibited, which is in the prohibition, which is in the list of prohibition, and during your processes, you come across the ingredients, you're doing the audit of inventory, and you come across that ingredient which is not allowed to be used in manufacturing or production because it may cause harm to the children. It may cause any particular disease in children. Then in that case, you might be required to even report this non-compliance to the regulator. because it's in public interest. And this is one of the exception of confidentiality. Withdrawal from the engagement. You may have to withdraw from the engagement as well as a last resort. After taking legal opinion, if nothing goes your way, if nothing is rectified, if the management is stubborn, if the non-compliance is so severe, you have to take the legal opinion, and then yes, you can decide, okay, let's withdraw. Okay. Okay. So this is about non-compliance of laws and regulations, all key aspects of the first learning objective. We'll look at multiple things later on. And let's start. We'll be taking. Okay. We'll be taking a break in a while after 5 minutes. But shall we take a break? We still have 5 minutes. So, yes, we can start discussion of the next learning objective, which is again very important. So, can everyone confirm me that this professional and ethical consideration is visible on your screens? We are having a revision, a quick revision of all the conceptual areas. Great. Okay, so what are the broad areas? Code of ethics for professional accountants, all key requirements we'll be looking at. We'll be discussing about the fraud and error, professional liability concerns as well. Okay. So what are the fundamental principles of code of ethics? Can anyone tell me? Might be on your screens now. There are 5 fundamental principles of ACCA code of ethics. Integrity, honesty, being truthful, open, honest in your dealings, in your reportings, obviously. Okay. Objectivity. What do you mean objectivity? Free from biasness. When you're taking business judgments, you're free from biasness. When you're taking any decisions, opinions, you're not pressurized. You're not basically impressed from any external factors. You're not influenced from external factors. Are you getting this? Unbiased. Unbiased. Avoiding biasness, avoiding tilting towards an end for no reason. Okay? And we'll see various examples for that. Professional competence. You should have professional skills. You should have relevant degree, relevant knowledge, skills, experience. Whatever services you are giving to the client, you should be professionally competent. Sharia. Very good. Confidentiality. During the course of audit, you come across lots and lots of confidential information. The business, even the business secrets, even the secret recipes, everything. Entity is just like an open book when you're auditing them. So whatever comes in your knowledge, it's extremely confidential. Don't disclose it to anyone. Even you get to know about the share prices, which are not out yet. You cannot disclose it. Confidentiality. All this information should be kept confidential. Okay. Professional behavior. Now, what is that professional behavior? Obviously, there are lots of laws and regulations which govern your behavior as well. For example, ACCA Code of Ethics, Code of Governance, Code of Corporate Governance. There are Code of Corporate Governance which also imposes few ethical requirements on auditors as well. So you should be aware of all such laws and regulations, all such legislations which govern your behavior, your conduct. We are not talking about ISs and IFRS here in professional behavior. In professional competence, we discuss that you should be cap up. You should be up to date with all those IFRS and ISS when you talk about professional competence. But when you talk about professional behavior, you talk about all the relevant legislations which are governing your behavior. So there is a slight difference. Okay. Okay. So these are the threats to objectivity. So I'll be just reading the names and then we'll be continuing our discussion after 15 minutes break because as here in Karachi, it's prayers time and I'll be offering my prayers. So if you wish to offer your prayers, you can do so. If you wish to have your dinner, you can do so. If you wish to have a cup of coffee or a tea for some refreshment, you can do so. We'll be having a break of 15 minutes. Once I read this list for our threats to objectivity, self-interest threat, self-review threat, familiarity threat, advocacy threat, intimidation threat, management threat. In short, they can recall all this threat through a mnemonic SAFIM, SSAFIM, self-interest, self-review, advocacy, familiarity, intimidation, management, SAFIM. See, I've just read the list. And once we are back from the break, we'll continue our discussion. Very important conceptual revision is underway. Don't go away anywhere. We'll be right back after the break. Break will be of around 15 to 20 minutes. Okay? So stay tuned. We'll be right back. Dear students, welcome back. So I would really appreciate if you can confirm me. Am I clearly audible as well as visible to all of you? Everyone? Perfect. Great. So welcome back. Uh, Greetings again. We were discussing about ethical and professional consideration. Very, very important learning objective. Very important learning objective. And in every exam, almost in every exam sitting, you will be seeing a requirement from this area. Because obviously, audit profession is all about maintaining and upholding ethical values. This audit is basically derived out of trust relationship. If you have a close look at the scheme of this entire audit, you'll see that shareholders are trusting on auditor. The dear Mr. Auditor, we are trusting on you. Please have an honest look on the financial statements and let us know if they are free from misstatements, with really present true and fair view, isn't it? Sharia, you can at least you can expect 10 marks. You can see more, but at least 10 marks. Okay. Okay. So these threats: self-interest, self-review, familiarity, advocacy, intimidation, and management threat. Okay. Let me give you a brief overview and then we will move on to every threat one by one. Well, let's move on because when we'll discuss it one by one, it might be better understood. Self-interest threat. Okay, as the name suggests, okay, when we say threat, threat, it simply means that there is an apprehension of something going wrong. Risk, threat. It simply means that there is an apprehension, chances of something going wrong. Okay, so what can go wrong here? Here, the self-interest can overrule the professional responsibility of the auditor. And what does that mean? That simply means that auditor may have any financial interest, any other interest that may impact auditor's judgment, that may impact auditor's behavior, and auditor may not act objectively. What does it mean? Auditor may not objectively. It simply means that auditor may not act in the interest of the shareholders. Shareholders have appointed auditor. They have trusted auditor. But since the financial interest of auditor is linked to the client and the management is ruling that interest, auditor may not act objectively. Okay, sure, you'll get the video link and you can watch it later. No worries. But those students who can bear with me, who can attend the session live, please do so because when you are involved, obviously, the session gets interactive. Okay, now what? Let's discuss about the situations which may create self-interest threat. Because in the question, you will not be asked about the definition of self-interest. In scenarios, you will be given multiple uh, situations where these threats may be involved. Now, okay, what and how could these threats appear? How could these threats appear? Now, see, we've listed multiple threats, so you have to be very much careful in listening whatever I'm explaining to you, because if you can listen it properly, if you can keep these arguments in your minds properly, you can draft your answers properly. Okay. Fee dependence. Simple. For example, if auditor is deriving a very significant fee from the management, from the client, and if the auditor identifies lots of misstatements, if the auditor is getting very efficient and auditor is identifying lots of errors and mistakes and misstatements, so the management may say, okay, we might need to look for another auditor who may cooperate with us. Auditor may think that if I identify lots of misstatements, management may not be happy with me and they may propose another auditor. So if the auditor is dependent in terms of fee, is getting a very high percentage of fee from one client, then auditor may tend to ignore errors of the client, may become complacent of those errors, may tend to ignore those errors. So in order to keep the management happy, because they are the one who will be dealing with the auditors. Getting this? Although the auditor has been appointed by the shareholders, but during the entire audit process, management. Okay. Fee dependence. Safeguards we'll see later. Gifts and hospitality. If the client is giving, for example, if I'm running an audit firm and I have multiple audit clients, and suppose if my audit clients are very hospitable with me, they are offering me expensive gifts, they are offering me annual sponsored world tour with my wife and kids, then do you think that I'll be going against them? I'll be very much skeptic against them? Probably not. Might be not. Therefore, the standards put restriction about gifts and hospitality. If you cannot accept significant gifts and hospitality from the client because they may impact your opinion. You may not be very much objective if you're accepting significant gifts and hospitality. Okay. You can, if it is in the normal course of business, if it's trivial, very small, inconsequential, may not impact your opinion, your behavior. For example, if they're offering you a lunch, or if they offer lunch to the team members on a daily basis as if they offer to their employees, or they offer 10% discount on the products as if they offer to their employees. Okay, then this is not something which may influence your behavior. Okay. But as I gave you the example, if it's a paid holiday trip, if I'm using their private jet, that's something big. Okay. And one situation doesn't only create one threat. Now, this is a very important point. Everyone should be very, very attentive. Everyone. Very careful and very attentive. Very important point coming up. One situation will not always lead to one ethical threat. One situation, a single situation, can lead to multiple ethical threats. And you will be credited for every ethical threat you explain properly. Are you getting this? You'll be credited for every ethical threat you explain properly. If you don't mind, I'm having cookies. Unfortunately, I cannot offer you online. But I'm assuming that you already had these cookies during the break, okay? So, how can one situation create multiple threats? For example, gifts and hospitality, creating self-interest threat. My interest is involved. I'm getting the benefit. If I identify lots of misstatements and mistakes, and the management gets offended, they might not offer me the gifts and hospitality in the future. I might stop receiving these nice gifts. Okay. Intimidation threat. Now, what is an intimidation threat? The client may pressurize me. The client may say, okay, if you are identifying so many misstatements, if you're identifying so many errors, okay, then we may disclose this to audit committee as well, that you are getting so much gifts from us. We may disclose to the shareholders as well that you have been utilizing these facilities. So you should cooperate with us. pressurizing. Familiarity threat. What does it mean? Doesn't it simply imply that if I'm receiving significant gifts and hospitality from the client, doesn't this imply that I'm very much friendly with the client? I might be friend with the CFO of the company. And if that's the case, in case the client and auditor are too familiar with each other, have been working for the last many years together, auditing for the last many years, auditors auditing for the last many years, it gives rise to familiarity threat as well. What does that mean? It simply mean that the relationship are so close, the relationship are so friendly, that the attitude of professional skepticism has faded away. I might not be critical about their operations. I might not be critical about their mistakes. I might not be critical about their misstatements. I might be too much accepting of whatever they do. I might say, oh yes, I know them. They're very good people. This is a very good client, and they don't do anything fishy. That's familiarity threat. I'm tilted. I'm biased. I'm not objective. I'm not objective to the misstatement, which might be there in the financial statements. Are you getting this? Is everyone getting what I'm trying to explain? Owning shares, financial interest. If I have shares in the client, if I hold shares of the client, and if I found a misstatement, which is lowering down the profits, will I be entrusted to adjust it? No. Because if the profits are down, EPS will go down, share price will go down, I will suffer depletion in investment. My investment value will go down. Okay, my investment value will go down. Are you getting this? So I will not be willing to act objectively in the benefit of the shareholders, in the interest of the shareholders. Are you getting this? Loans and guarantees. If the client has given loans and guarantees to the firm, again, self-interest. My interest is involved. They've granted me the loan. They've granted me a significant guarantee. And I might be obliged to them. My interest is involved. So how can I be skeptic? How can I be what should I say? How can I be very objective, skeptic and objective for the misstatements, errors, problems identified during the course of audit? Getting? But if it's on commercial terms, if I've taken a loan from a bank, if the bank is my client, if I've taken a loan from the bank on the commercial terms, on the market terms, then I do not need to worry. Because that's on commercial terms. No favor has been taken. If it's in the normal course of business. On commercial terms, it's a normal course of business for a bank. And it's immaterial as well. So that's sort of safeguard. Then that's not an issue. Business relationship. If I have a business relationship with a client, I have a joint venture. So why I would like to upset my business partner? Okay. Until and unless it's on commercial terms. Again, if the transaction is on commercial terms, suppose if I purchase any goods, if it's an AC manufacturer, my client is an AC manufacturer, and if I purchase the air conditioners on the market terms, that's not a business relationship. Or if it's a business relationship that doesn't impact my objectivity as an auditor. Potential employment. Very important. Suppose if a senior manager who is acting as a senior manager of an audit client has negotiations with the client and he's a potential employee, and he might not be willing to go against his prospective employer, isn't it? Otherwise, he might risk his potential vacancy. His personal interest, self-interest is involved. Overdue fee. If I have an overdue fee and the client has not paid it yet, and if I've started another year audit, then I will try to be nice to the client so that I can get the previous fee. So I might be inclined to ignore their misstatements. See, whatever explanation I'm giving to you with every situation is key. What is the biggest mistake which the students commit? They identified the ethical threat and they identify it properly. What they don't do or what they fail to do is explaining that threat. If you fail to explain the threat, then why is it a self-review threat? Why is it a self-interest threat? If you fail to explain this very fact, then you will lose an important mark for that. So whatever explanation I'm giving to you is very key when you are drafting an answer. We'll see why. We'll practice it. All these explanations will strengthen your answer. You will be required to evaluate ethical threats. Exam question asks you to evaluate ethical threats, not only identifying it, evaluating it. And when the examiner says evaluate ethical threats, it simply means that you have to comment on it. Why is it a threat? Why is it a threat? Is it a significant threat or is it ignorable? Or can be reduced through safeguards? Getting this? So, overdue fee. It's considered as a loan. And if it's the case, consider reappointment because your objectivity might have been impaired. Contingent fee is not allowed for audits. What is contingent fee? A fee which is based on unknown outcome. For example, profits. For example, revenues. If my fee is based on profits, if my fee is based on revenues, so I'll be very much interested in inflating those revenues. I'll be very much interested if the profits of the client go high. And if I find any misstatement which is lowering down their profits, I might skip it. I might ignore it. I might be biased in my favor, isn't it? But for non-assurance engagements, it's allowed, not always. Is prohibited if fee is material or outcome is dependent on future judgment relating to material amount of financial statements. If the fee is material, an outcome is dependent on any material amount in financial statements. Outcome is indirectly linked to any financial statement figures in which we have involved. Okay. So compensation, evaluation on cross-selling. Again, if I evaluate the performance of my audit manager on the basis of his cross-selling, what is cross-selling? If my manager is acting as an audit manager, and if I've already given him the instructions that you also have to cross-sell our services, then he will be actually doing the audit, but he might be selling the taxation services as well to the client. He might be selling the ERP services to the client as well. Now, what will happen? He will have to be very nice to the client in order to sell those services. Are you getting this? He'll have to be very nice with the client. An auditor, if auditor is getting nice to the client, it simply means the auditor is getting inclined. Nice does not mean ignoring misstatements. Now, in order to secure the bonuses, my manager can even ignore misstatements. So compensation and evaluation on cross-selling is strictly not allowed for audit partners. And if it's not an audit partner, if it's a senior manager, then there should be safeguards. Okay? Yes. For partner, it is not allowed. For managers, if it is allowed, there are safeguards. Okay? Which services he can sell, to which extent, to which clients, things like that. Familiarity threat, simple. Familiarity threat means that auditor has been serving for so long to a client, and the relationship of auditor with the client has become too friendly, too sympathetic, too trusting, that he has faded the trait of professional skepticism with that client. Now, whatever comes up or whatever that client says, whatever that client presents, whatever the client shows, auditor is very much accepting, trusting, and auditor is not looking with professional skepticism. Basically, in other words, his professional skepticism has been compromised, sacrificed, not active anymore. What could be the situations in the exam scenario? Long association of senior personnel who's working for so long on a client. Familiarity threat. He might have developed a bonding with the client. He might be ignoring the errors of the client. He might be accepting everything on the face of it. He might be no, he might be questioning the clients wherever required. Family or personal relationship. Suppose if my spouse is a CFO and a client and I'm auditing that client, then my family relationship is involved, my personal relationship is involved. So I might be inclined to ignore the misstatement as well. Okay. I might be too trusting on my spouse. I might be too trusting on my wife. And I might say, okay, I know my wife is very competent. And if she has presented this set of financial statements, there might not be any issue in that financials. Family or personal relationship. Too trusting. Employment with the audit client. Okay. Again, we have seen this situation earlier as well, but we saw this with self-interest. Now, this same situation, employment with the audit client. Now, see, it's also creating two more threats. Familiarity threat. Because if the employment negotiations are underway with my staff, that simply means that my staff has friendly relationship with the client. Therefore, they are considering employing him, isn't it? So it means whatever work he's doing or whatever work he has done, there has been familiarity threat that might need to be reviewed by some senior person or that might need to be redone. Intimidation threat. Now, how can be there an intimidation threat? Can anyone tell me? Think of it and let me know how can there be intimidation threat? Anyone? Okay. Intimidation threat, for example, if you have a senior resource, and if that resource have potential employment negotiations going on with the client, then the employer, that is the client, might pressurize that senior resource. Okay, if you keep on identifying these mistakes, then you might not be a suitable fit for us because we need cooperative people, isn't it? Pressurizing, pressurizing the manager, pressurizing the manager. The client can pressurize the manager. But you need to be kind with the CFO if you need this job. If you keep on identifying these mistakes and misstatements, that means you're not a very cooperative guy. Very good. Employment with the audit client. Okay. I was asking about employment with the audit client. Are you getting this? Okay. Self-review threat, very important and a very common threat, a very commonly asked threat. What does it mean when we say it's a self-review threat? Very simple. When a self-review threat arises, when we do some work and during the course of audit, we review the same work on our own. I always give an example to my students that assume that you are attempting AAA exam and then ACCA asks you that you should mark your own copy, mark your own exam script. What will happen? Number one, number one, read this. You may not identify the error in your work. Why? Because in your eyes, you have done the masterpiece. According to you, you might have seen many students. Whatever I've written, I'll definitely pass this exam. I'll definitely pass this exam. Why are they saying this? I'll definitely pass AAA. Why are they saying this? Because in their view, in their intellect, they have done everything right. They've produced a masterpiece. But sometimes it's rubbish. So they end up failing the exam. So if you are assessing your own work, there are chances that you won't be able to identify your mistake because according to you, that's the best thing. You will be biased in your own favor. Reason number two, there are two reasons. This is one of the reasons. Reason number two. Okay, so the first reason, which is written after this or, this is the first reason. Even if you're honest, even if you are honest, you might not be able to identify your own mistakes because as per you, you have done the best. You have done the right thing. The second case, that auditor will be unlikely to admit errors. For example, if you have done the AAA exam, you have attempted AAA exam, ACCA asks you to examine your own copy, you have forgot to write one part of 10 marks. You know this is your mistake. You've forgotten. Or you've written the wrong procedure. Instead of deducting your own mark, you will say, okay, that's right. Now that's in the sense of dishonesty. You are intentionally trying to hide your mistakes. That's an intentional act. That's not an intentional act, that's an unintentional act. That if I'm doing some work, I might not be able to identify my own mistakes. And the other thing is, I am intentionally trying to hide my mistake. So this will happen in every such assignment, which if I perform, I am reviewing it during the audit. If I'm performing it in the first phase, if I'm performing it in the first place, and then I'm reviewing it during the course of audit, this will always happen. Are you getting this? What could be the situations? Suppose if we ourselves are doing accounting, bookkeeping, financial statements preparation, and then we are reviewing it on our own. If we are providing them internal audit services, testing their controls, identifying control observations, and we, during our audit, reviewing the same controls, going through the same control reports, doing the same control testings, and then we identify that during the internal audit, we might not have done the right work. The controls are not right. There have been problems during internal audit. We haven't identified those controls. So we are reviewing our own work. Tax services. If we ourselves have provided taxation services, and we during the course of audit, when we review the tax area, we see that there has been some mistake and we might not be able to. In first place, we might not be able to identify it. And in second place, even if we've identified it, we might not be willing to accept it. Self-review threat. IT services. If we have provided the IT system and that's doing some errors, and if those errors identified during the financial statements review or during the audit, then we might not be willing to disclose those errors because the client is using our own system, our own IT system. Okay, and the client may say, if I identify the errors of my system, the client might say, your system is rubbish, throw it away, and we'll not pay you any fee for this system anymore. Getting this? Valuation services. If we are valuing something, if you are valuing, for example, pension benefits, if you are valuing financial instruments, and then we review it as part of our audit as well. Self-review threat. So anything which we do, and then we review it as a part of the audit, it'll create self-review threat. Very simple. Temporary staff assignment. If we assign any staff to the client, if he's doing some work, and then his work has resulted in any financial statement figure being derived, and then we audit that figure, self-review threat, because he's our team member. Corporate finance services, very simple. If the client engages us for any due diligence services, acquisition services, client wants to acquire any company, and if they have asked for our opinion for our services, and if we perform due diligence services and we have given them go ahead, very good, take it over. And then later on, during the audit, we come across some information that this acquisition was not good, or we have suggested wrong acquisition, not fruitful for the company. Don't you think this is a self-review threat? Client staff joins audit firm. My client, sorry, if some staff has joined audit firm and he is looking after the client, and he was the employee of that client, he was on the other side of the table. He has done the work, and now whatever work he has done at the client becomes part of the financial statements, and those financial statements are being reviewed by the same person as an audit representative. So the same person reviewing his own work. Okay. Self-review threat. So I have been quick to discuss these, but these are simple. Okay. Now, a few important points. If you talk about internal audit services, whenever the internal audit services discussion come up, you have to make this point that if you are providing internal audit services, yes, you can provide. If there is self-review threat, that can be reduced. How to reduce, we will see. But you cannot assume management responsibility, because whenever there is an internal audit service assignment, the management may ask you, okay, you have identified the control deficiency. Now, please also get this control set, get this control fixed, get this deficiency rectified. Okay, now taking the steps in implementing the suggestions, implementing the recommendations. Now, this is the management's task. We being audited, okay, we can provide additional services, but standards specifically prohibit that we provide them management services. Because taking decisions, implementing something, that's the management's task, that's the management duty. And standards clearly prohibit that we shouldn't involve in management activities. Taxation services, as far as taxation services are concerned, if there is simply return filing, return preparation, calculation, that's perfect. You can do it. But if it involves valuations, disputes, contesting disputes on behalf of the client, then these will create additional threats. Tax valuations, yeah, this will create self-review threat. Disputes, this may create advocacy threat if you are contesting their disputes. IT services you can provide, but there shouldn't be the management role. You shouldn't be involved in decision making. Management should take the decisions. For valuation services, there is a self-review threat as well, and there is an advocacy threat as well. Because if you are the auditor of the client and you give the lower value, then you think the client might be unhappy. For example, the client has involved you for valuing their non-current assets so that they can have the loan. So they are willing to have the loan. They want to have a decent value, good valuation for their fixed assets. Okay. So there is a possibility that auditor, in case of valuation, may give the favorable valuation, which means that they are acting in the interest of the client, creating advocacy threat. Corporate finance services again involve self-review threat. I've already explained you, but these also create advocacy threat. Why they create advocacy threat? Because, for example, if we are acting on behalf of the client, so we will be thinking about their benefit. We'll be thinking about their brighter prospects. So we have been appointed as an auditor in the capacity of, say, a reviewer, but we are ended up helping them out in acquisition. Okay, so standards say that it may create an advocacy threat, that we are acting on behalf of the client. The shareholders may assume that auditor and client are one. Okay. So this is the holistic view of self-review. I hope and I believe that this is crystal clear to you. Advocacy threat, again, what does advocacy threat means? Advocacy threat means acting on behalf of the client, promoting position of the client, taking the sides of the client. For example, if we are representing any material court case on their behalf, if we are negotiating the bank loan on their behalf, if we are contesting their dispute with the tax authorities, then this may give an impression that we are acting on behalf of the client. Although we should be acting as a police, as a reviewer, as a vigilant, as an invigilator of their financial statements. But these services will give an impression that as if we are acting on behalf of the client. We and client are one. This creates the wrong impression. Getting this? Although we are internally by heart not tilted, but independence in appearance is also important. Shareholders may think that auditor and client are one. Hearing this? Loan of a personnel from an audit firm to an audit client. If we are loaning a personnel, if we are loaning up, for example, they have asked, okay, please give us a senior resource who can act as a board member. So don't you think that that board member will be taking decisions in the favor of the company for the betterment of the company? That means that board member will start representing the company, taking sides of the company, will be promoting the position of the client. Providing valuation services to our audit client, I've already discussed this. Providing tax services, I've already discussed this. Contingent fee, again, if our fee is dependent upon the profits, if our fee is dependent upon the revenue, so we will be very much promoting the position of the client. We will try to inflate the revenues. We may try to inflate their profits. We may try to take sides, their sides. Okay, this is right, this is right, this is right. Contingent fee, not allowed for audits. Intimidation threat, where pressurizing situations arises. Fee dependence. If you're dependent in terms of fee, the client may pressurize us. Gifts and hospitality, client may pressurize us. I already discussed. Family and personal relationship. Okay, the person related can pressurize us. For example, if I identify any misstatements in the work of my spouse who is CFO the client, my client, then there could be some serious problems. Okay, recruitment services. Recruitment services. Again, recruitment services. Okay. Intimidation threat. Intimidation threat. If we recruit any resource on behalf of the client and that resource might not turn up good, then the client may pressurize us that this is your resource. Whatever wrong has been done, whatever problems have been there in the financial statements, it's your resource. You have recruited this. Employment with an audit client. We've already discussed this. Litigation between the audit firm and the client. If there's litigation going on and a court case going on, then the auditor might feel pressurized that if we become professionally skeptic, if we identify misstatements in their audit work, so this court case which is going on with the client, they may come harder at us. Are you getting it? Their stance may get stiff. We might not get the money. Are you getting this? Pressurized. If there's a management threat, now what is a management threat? Assuming responsibilities of behalf of management, setting their policies, decision making, assuming any of these roles, hiring or dismissing employees, directing assuming any of this responsibility or carrying out any of this responsibility on behalf of client obviously gives an impression that we are part of management, and in actual we shouldn't. Deciding which recommendations to implement, reporting to those charged with governance, taking the responsibility of preparation and presentation of financial statements. No, it's management's task. You shouldn't assume these responsibilities. You are auditor. Taking responsibility for designing and implementing and maintaining internal controls. Therefore, where any such threat comes up in the examination, be it internal controls, be it internal audit, be it IT system implementation, be it anything, which may involve management decisions. So examiner always write this may create management threat, and the auditor shouldn't assume management responsibility, should not involve in decision making of the management, and should make this very clear to the management that they stand responsible for their decisions. Our task is just to suggest them, just to recommend them, and they are the one responsible for their decisions. Are you getting this? And informed management. Management should be informed, should be knowledgeable. Otherwise, what will happen? Whatever we suggest, then they'll take it as it, because they are not knowledgeable in that field. They do not know their area. If they are not knowledgeable, they are simply going to implement our recommendations. They will not think of their own. Okay. So see, prohibition: a firm must not assume management responsibilities as part of an assurance engagement. Supporting safeguard: management makes judgments and decisions. Uh, Admin services of routine nature. If there are admin services of routine nature, then there is no threat. And the next safeguard is informed management. Informed management. Okay. For any threat, you need to assess the significance as well. Value. What is the value of the threat involved? Value of the gifts and hospitality. Seniority of the staff. Is the management under threat or a junior staff? Impact on audit firm. Fee dependency. What's the amount of fee? Materiality to the financial statements. If you are providing any non-audit services, how material is it to the financial statements? So these factors basically determine the severity of the threat. What could be the usual safeguards? If there's a fee dependency, there are specific guidelines. Okay. What are those? Firm's independence is threatened if total fee from an audit client exceed 30% of the firm's total fee for 5 consecutive years. We're not talking about the listed entities. For listed, the requirement is different. This is for unlisted. If the fee exceeds 30% of the total fee, 5 years, then EQR should be performed. Well, obviously, if it's not a listed company. If it's a listed company, EQR is always there. But the fee requirements are also different for listed company. It could be either a pre-issuance review before 5th year audit opinion or post-issuance review after 6th audit opinion. Remember this. Either a pre-issuance review before issuing your or get it reviewed by some senior person, EQR, or after the 6th audit report. Rotate staff, especially partner, listed for listed company after every 7 years. Cooling off period of 5 years. Do not allow shares to be held, prohibited. Use separate team for other services. This safeguard is for self-review thread. Use separate teams, separate offices. Remind management that they remain responsible for company decision. This is for management threat. If asked for second opinion, if the client asks for second opinion, okay. In case of second opinions, you should refuse unless allowed to consult with the current auditor. Why? Because in case of second opinion, the client tries to intimidate an auditor. If the auditor is not giving the opinion of the client's favor, they try to pressurize. Okay, it means that you are not aware of this issue. We might need to consult some senior auditors. So in this way, the client tends to pressurize the auditor. Okay. So what is the responsibility of the firm who is being approached? They should say, okay, we'll give you second opinion, but we should first discuss the case with your existing auditors so that they can have a better understanding what issue is going on. Okay. No contingent fee for audits. I've already told you. Hot reviews on audit working papers and before the work is finalized, before the report is finalized. Pre-issuance reviews. We'll discuss about it. For listed companies, public interest companies, second partner review is compulsory. And for public interest companies, for listed companies, these are the specific safeguards which have been listed here. No loans from client unless it's a bank under normal terms and conditions. Otherwise, loans are not allowed. Okay. For listed clients, the fee should not exceed 15% of the total firm's revenue 2 consecutive years. If the EQR before second year audit opinion is issued, firm must resign if the situation is for 5 consecutive years. No loan from non-bank unless immaterial to staff. Staff cannot also take such loan. But yes, if the staff loan is immaterial, can take. Immaterial. No involvement in any material figure of financial statements. We cannot provide them valuation services. We cannot provide them bookkeeping services unless it is for an immaterial division. Okay. No internal audit service relating to financial statements figures. No design or implementation of system which is relating to the financial statements. Because for a listed company, the threat magnifies. Are you getting this? Engagement partner gets no bonuses for selling or cross-selling, no secondment of staff unless client fully directs their work. Confidentiality, I've already discussed what is confidentiality, and there are circumstances which permit the disclosure. You should learn these because it sometimes is tested. And yes, I recall in the last 3-4 attempts, this has been tested. Confidentiality. You can give the disclosure, but if it's permitted by law, required by law, if the ACCA is complying, is investigating your work, okay, required by law, obviously, with legal authorities, tax authorities, safety non-compliances, public interest, where it is deemed to be in the public interest. I gave you the example of the toys, remember? And if things are not going, even if you're resigning and if you are not working for that client, if you're not providing audit service to that client, you're no more associated with the client, even then you are not required to breach the confidentiality. Very simple. Yes, Shariar, any question? You raised the hand. Yes. Yes. There can be a relaxation of 1 year. Okay. There can be a relaxation of 1 year, but the normal criteria is 7 years. Okay. Okay. Conflict of interest. Conflict of interest. If what is this? Suppose a firm is acting for 2 clients. A firm is providing services to 2 clients. For example, audit of 2 companies, and they are in the same industry. They are competing with each other. If you're auditing one client and you're auditing another client, so you may come across situations where their working papers are crossed over. Their processes, one team is getting to know the processes of the other company. The confidential information may leak, or uh, you might be getting to know the trade secrets of both the companies, and you might suggest this company some trade secret which you've got to know from this company. Or you may disclose in meetings their contracts which they are securing from such suppliers which they are unable to secure. You may disclose any cost to the compactor. There could be issues, there could be problems. So this is a situation when there comes conflict of interest. So where same firm is appointed for 2 companies that interact with each other, companies in the same market which trade with each other, conflict of interest may create a threat to the fundamental principles of objectivity and confidentiality. Confidentiality may also be at risk. You may also incline to one party. Okay, so it may be perceived that auditor cannot be objective in such cases, where what is good for one client is bad for the other can create problem. Okay, so what to do? Safeguards are there. You should keep these on your mind. Send separate teams from separate offices if possible. From separate offices so that these teams are not linked up. Use different partners, not one partner looking after both the clients. And two different partners, and even third partner review to see that both teams are kept apart. Stricter confidentiality for working papers. Tell both the clients about the conflict of interest and tell your safeguards, what safeguards you are doing to secure their interest. And if the client is still uh, concerned, then you may consider resignation from one or both the clients. Getting this? Then comes the exam technique for ethical threats. Okay. As far as the exam technique of ethical threat is concerned, this is very important. You first have to identify the threat. Scenario, you have read the scenario. And once you have read the scenario, the threat will be crystal clear. Is it a self-interest threat? Is it a self-review threat? Is it an intimidation threat? Is it an advocacy threat? So you have identified the threat. As you have identified the threat, you will get 0.5 marks. Then you have to explain the threat. Now, when I say you have to explain the threat, I simply mean you have to give the reasoning of the threat. Why is this threat? Why are you saying that this is a self-review threat? You have to explain. You have to explain. Since we have provided the services, we might not be able to identify our own mistakes. The firm might not be able to identify their own mistakes in their own work done. Independent eye or an independent review is required. And the other reason is the firm might be intentionally ignoring if they find their mistake. Explain. Self-review threat. Okay. If there is any significance, factor of significance, seniority, amount, comment on it as well. And safeguard. Safeguard contain one easy mark. So you will be getting 0.5 for this identification and 0.5 for explanation. 1 mark. Okay. If you can explain this threat from another perspective, from another threat perspective, another mark. For example, a situation giving rise to self-interest threat, familiarity threat, intimidation threat. Write it in 3 ways, you might get 3 marks. You may get 3 marks. Getting? Okay, then there are questions which are being asked in such a way, ethical and professional considerations. Okay, so we have just discussed ethical considerations, so we have not yet discussed other professional considerations, but so I'm discussing this technique. Whenever such question arises, whenever such questions come up in your exams, ethical considerations. You need to first of all identify the issue, identify the threat, identify the problem, and then explain why is it an issue. 0.5 mark for identification and 0.5 mark for explanation. Threats to objectivity. You have to explain the threats. If there is any self-interest, self-review, advocacy, familiarity, intimidation, management. If there is any confidentiality concern, you should identify it. If there is any integrity issue, you should identify it. Conflict of interest. These are the ethical considerations. What could be the professional considerations? Remember one thing, you are not required to segregate these two. You are not required to draw a line and bifurcate ethical threats and professional threats. No. You should simply keep on making the points as are coming in your mind. You're not required to bifurcate. Suppose if there is any money laundering concern, that's a professional issue. If there is any auditor's liability concern, another report is being issued and that report might be issued to anyone without the consent of the auditor. Practice management issue. What is practice management? We'll see. Quality management, advertising, any other concern. Impact on audit. What could be its reporting impact? We will see in audit reporting section. Okay. That could also be a professional consideration. That if there is something fishy, how can we address it when we are reporting in relation to that entity? Getting this? So this is about core discussion of ethical and professional considerations. If there are any questions or comments, Please give me questions, concerns, please ask. I'm just having a glass of water. We are having 5 minutes break. 5 minutes break, and we'll be back after the break. What's the time? Okay. We are taking 5 minutes break. We will be back after the break, and then we'll continue a bit of discussion. We will at least discuss the quality management today, and we'll see how much we can cover. So we'll be back after the break, 7 minutes break, and so that I can have some water, and then we'll continue after 5 minutes. Okay. Dear students, can you please confirm me? Am I audible and visible to all of you? Great. Okay, so here comes the discussion of another important area, which is quality and practice management. In this area, one discussion is about fraud and error. We know what fraud, what is error, what is misstatement. Misstatement is the difference between the reported amount, classification, presentation, or disclosure that is required to be incorporated, that was required, but has not been actually incorporated. That simply means it's the difference between the wrong one and the correct one and the wrong one, which has been incorporated. This is the mistake. For example, non-current assets should have been reported at $5 million, and in actual they have been reported at $4.5 million. So that means the misstatement is 0.5, the difference between the correct and the wrong figure. That's the misstatement. Can arise from fraud or error. We know this. Error is unintentional, fraud is intentional. Could be misappropriation of assets, theft, dummy suppliers, ghost employees, wrong payments, or it could be a fraudulent financial reporting. It doesn't include theft. It doesn't include theft, but it may include playing with the numbers, inflating the revenues, booking fake sales, things like that. Fraudulent financial reporting. Why it occurs? And this is the most common situation you will encounter in exam, fraudulent financial reporting. There may be an increased pressure to show good results. Performance related pay of the directors. Directors may inflate the figures to show the performance, the false performance, to earn bonuses. We may inflate numbers to obtain finances in difficult condition to meet the covenants of the loans. Errors is unintentional, and the main thing is whenever if the error is identified, the client readily rectifies it. This is a mistake. Mistake in gathering the data, presenting the data, applying accounting policies, anything. Main responsibilities on the management. This is the financial statements which are prepared by the management. Asserts that these financial statements are correct, free from misstatements. So it's their responsibility to prevent fraud. If an actual it has occurred, to detect fraud and to rectify the consequences, to place a strong mechanism for fraud deterrence, control environment, tone at the top, things like that. What is auditor's duty? Auditor is there to assess the risk of misstatement in the financial statements due to fraud. If the financial statement may be misstated due to the fraud, that comes under auditor's responsibility. But still, the primary responsibility is with the management. Auditor will only perform the procedures, and even this is not the guarantee that those procedures will uncover fraud, because frauds are committed to actually conceal the transaction, to actually deceive. They are intentionally coated, covered, hidden. Are you getting this? Although there are procedures of the auditor which may be targeted to identify fraud, but this is not a guarantee. This is not a guarantee. This is the expectation gap which exists between the users of the financial statements and the auditor. They think that auditors are fraud catchers, but in actual they're not. Are you hearing? Yes, they're responsible to design specific procedures, the specific tests. Those tests which as 240 asks them, which may uncover fraud. Yes, we'll perform, but we are not primarily responsible. Okay. Applying professional skepticism, considering management override of controls possibility, suspect susceptibility, discussing it with the audit team, things like that. Okay. Inquiries of the management, internal audit, instances of fraud, what have been the consequences, what have been the steps taken by the management if there was any fraud in the past, and what is inherent limitation, that there's an unavoidable risk that any material misstatement may not be detected, even if the audit is properly planned and performed. Because the fraud is conducted with the deliberate intention to conceal it. Responses, overall responses, assign senior staff, evaluate policies properly, unpredictable procedures, specific responses, review journal entries, manual entries, which are not flowing through module, estimates, judgments, they might be biased, they might be inflated, there might be frauds or intentional manipulation in those judgments. Okay, take written representation. And if at all the fraud has been identified, communicate it to the management, those charged with governance audit committee. Ask them to address it, rectify this. If the integrity of those charged with governance in doubt, report it to external regulator. If there is a report impact on report, misstatement not being rectified in the financial statements, qualify the opinion, have the impact on the audit report. And if situation is out of control, take the legal opinion, and you can even resign if there is a significant event of fraud. And if you feel that your position can be in some litigational danger. Auditor's liability is an easy topic. I'm not going to discuss this in detail, but very simple. Auditor is liable for his work. He has to perform auditing standards. He has to perform, he has to apply his skills, experience, comply the professional standards, auditing standards, ethical requirement, and shouldn't be negligent. Okay. An auditor is responsible to the shareholders. And if to anyone else, if auditor is also responsible to anyone else other than shareholders, if person relied on the audit report, as a result, third party lost the money, the audit firm was unaware that financial statement was made available to third party. Are you getting this? So therefore, issue a disclaimer in the audit report or address report to the shareholders. Disclaimer, this is only for shareholders. No other party should rely on. We are not responsible. We are not responsible to any Tom, Dick, Harry who is having hold of this audit report and making decisions on behalf of this. We are only responsible to this party. We are not responsible for your loss. Are you getting this? So, auditor, in short, in order to limit the liability, auditor should put disclaimer. Simple. An auditor should perform the procedures, should perform the entire exercise with care, due professional care. Shouldn't be negligent, shouldn't be proved negligent. Getting? How to restrict liability? Allow audit firms to not to be partnerships, limited companies, LLPs is required to have insurance and things like that. So it's just a theoretical discussion. Expectation gap we've already discussed. Again, this is something which is tested in the exam after every 2-3 attempts. What is an expectation? Shareholders thinking that auditors are auditing the financial statements, they are identifying all non-compliances of laws and regulations. They are identifying all instances of fraud. They are identifying every pitfall, control lapse of the management. This is not the case. Are you getting this? This is not the case. This is the expectation gap. This is the expectation gap. And standards try to bridge this gap through explanations, through the responsibilities, through everything else, like auditor's responsibilities, CAM. Okay, so this is the discussion about frauds and liabilities and things like that. Then comes quality and practice management. Quality management is a again, very important standard. And within quality management, within quality management, okay, let us move. There are acceptance considerations in quality management. This is part of quality management that the firm develops the quality parameters. The firm develops such policies and procedures that whenever any client comes up, any assignment comes up, they're tested on some benchmarks, they're tested on some parameters. And if they pass those parameters, then we should accept it. For example, there shouldn't be ethical issues. We've discussed it. We should be competent. There shouldn't be the case that we're not competent to carry out an assignment and we have accepted it. No. We should have staff and resources, we should have timing, and we should be able to follow timing and deadlines. We should be able to see that the client is free of other professional issues like money laundering checks, background checks, fee considerations. Fee should be proper, should remunerate our hours allocated, our exercise, our efforts being put into the assignment. There shouldn't be conflict of interest. Client screening, know your client, client integrity, and things like that. Directors, no political connection, affiliation, things like that. Of professional clearance, if it's an audit acceptance, professional clearance from the outgoing auditors. Should we be aware of any professional issues that why we shouldn't accept this audit? Ask them. Have professional clearance letter from them. Preconditions of audit are present. The client should accept and acknowledge the responsibility of the financial statements. Overall controls, providing unrestricted access, the basic premise, the preconditions of the audits. Okay. And what about non-audit assignments? We'll discuss it later as well. But all those elements should be there as well, except the professional clearance. In which case, as well, we can discuss with the existing auditor that why you have not been assigned this task and why we have been approached. Is there an issue? Is it okay to accept this assignment? Preconditions of audit, obviously, this doesn't also play part, but rest all the elements should be there in the, see this plus sign. Yes, Sharia, this is called professional etiquette letter, okay? Professional clearance letter as well. So in case of non-audit acceptance considerations, all these elements will be included, will be considered. Ethical issues we have to evaluate. Competence, staff, resources, timing, deadlines, other professional consideration, fee consideration, conflict of interest, client screening, everything is important. Even if it's a non-audit assignments, acceptance considerations should take care of these parameters. Plus some additional. Which ones are the additional? Who is the intended recipient? Are we reporting to the bank? Is the bank intended recipient? Is it the government? Is it the shareholders? Who else can get hold of this report? Because if anyone else can get hold of our report, we will become liable. Disclaimer sort of thing. Okay. We should put disclaimers. Level of assurance. What is the level of assurance? Is it reasonable assurance, lower level of assurance? Which sort of assurance? So usually the other non-audit assignments, the review engagements, less assurance. Okay. Negative assurance is given usually. Extent of evidence expected to exist. Will it be a solid evidence or will it be an average evidence? For example, in case of prospective financial information, future cash flow forecast, future revenue forecast, the evidence available is not that strong because we're talking about the future. Subject matter. What is the subject matter? Is it a cash flow forecast, profit forecast, due diligence assignment? What is the subject matter? What I will be checking in that subject matter. Are you getting this? For example, I may be asked to check only sales forecast in the P&L forecast, in the forecast of P&L. Okay. In agreed upon procedures, I can only be asked to check the sales forecast. What is the purpose? Is it to take the loan? Is it to submit to regulatory authority? Who prepared the info? Is he knowledgeable, qualified? When prepared? How was it prepared? For relevance. If it was prepared in past a lot of months earlier back, there may be factors which might not be hold good at the moment. So this is a very important technique, and I will further focus and emphasize on this technique when we will be attempting any such question. Professional cravings now, this is a very easy thing, and you know this preconditions, you know this fee setting should be reasonable, determined, predetermined, should commensurate with the services and things like that. Easy things you can go on your own. Low balling, can we quote a lower fee? Can we quote a lower fee to win over an assignment? Answer is yes, provided that, provided that you should uphold your professional competence. It creates self-interest threat because if you're lowballing, if you're quoting lower fee, this simply means that we are trying to win over other assignments to secure the loss of fee. We might be trying to pitch in the other assignments to the existing client so that we may recover something. So self-interest threat. Are you getting this? So we might be very much willing to win other contracts from them. So we may try to keep them happy. This could lead to self-interest threat as the auditor may try and keep their clients happy simply in order to win other contracts with them. So this comes the threats. There comes the threat. So it's allowed if quality maintained and client knows the usual price. Because if client knows the usual price, okay, that you are auditing in $1,000, in actual the value is $10,000, then client will say that we need your services worth $10,000. Okay. So you should maintain the quality and you should tell the client what's the actual price which should have been charged. Contingent fee, we've already discussed. Fixed fee arrangements, clients usually prefer these. Other fee arrangements could be there. Hourly rates, referral fee. Okay, referral fee is important. What is the referral fee? For example, if the client needs IT services, I am the client's auditor. I know a very good friend of mine is providing IT services. So I may refer my friend to the entity. And I may have some backdoor arrangement with my friend that if you get this assignment, so whatever fee you will be securing from this client, I'll take 20% of it. I have an arrangement with my client. Sorry, with my friend. That whichever client I will refer you, I'll take 10% of the fee. So I'm recommending that friend. So don't you think that again, this will create a threat? Yes, it creates a threat, self-interest threat. My interest is involved and I am tilting towards my friend. Are you getting this? So can you earn referral fee? Answer is yes, but do tell the client that you are earning a referral fee so that they assess your referred party critically. They should know that your vested interest is involved. Then the client may properly, rigorously check whether that IT company is good for them or not. Okay. If so, clients should disclose regarding commissions. Getting advertising related doesn't come up. You can go through on your own. Tendering, very easy thing. You can go on your own. Quality management. Quality management. A very important discussion we have about quality management. And within quality management, okay, I'm not going through the entire quality management discussion. Obviously, what does quality management means? If I'm running a firm, if I'm the leader of my firm, then the standards require my firm to follow the parameters of quality because service quality matters the most. We are not selling goods so that we take care of the quality of the goods. We are selling our services. So our services should be of top-notch quality, such that we uphold the professional values. Are you getting this? So there are few standards which talk about quality. ISO 220 talks about the quality management of an audit of financial statements. Quality within an audit engagement, within an audit of financial statements. ISQM1, quality management standard, international standard on quality management. It talks about the quality management for the firms that perform audits or other services. Quality management of financial statements in ISO 220, quality management of firm in ISQM 1. ISQM 2 talks about engagement quality reviews. Which is the most important? This discussion, the quality management, foreign engagement, foreign audit engagement, this is very, very important. And then engagement quality reviews. This is practically important, but not very, very examinable. Yes, there are some elements which you will discuss that any control weakness should be monitored on firm level, leadership plays a part. Yes, there may be few comments here or there involved, but as far as importance is concerned, this ISO 220 and ISQM 2, these two are very important. Specifically, okay. So, one very important matter which I want to highlight here, when we talk about quality management systems, ethical requirement are again part and parcel of quality management system. So even if the question asks to identify the quality management considerations, to comment on the quality management issues or quality management considerations, even in that question, you are assumed or required to evaluate ethical threats. Because ethical considerations are also part and parcel of quality management system. So even if the question doesn't ask you specifically, explicitly about ethical considerations, even then you are required to evaluate this. Are you getting this? Very important. Acceptance and continuance. We've already discussed this. And then comes engagement performance. These three are very important. Leadership responsibilities, there should be leader, so set the tone at the top, should be responsible for monitoring so that there are no non-compliances, everyone adheres to the policies and procedures. Yes. Engagement resources, there are technological resources, human resources, tools, things like that. Monitoring and remediation. The leadership should keep monitoring the policies, the procedures, if there are any deficiencies, anomalies, pitfalls, have those remediated, things like that. Overall responsibility. Overall responsibility for the opinion lies with the engagement partner of this team. Documentation should be proper, should be appropriate, should document conclusions, things like that. Easy peasy discussion, not difficult. Three things are important. Ethical requirements, we've already discussed. Acceptance continuance, we've already discussed. Last but not the least, engagement performance. Okay. Rest, you can read on your own. Not a big deal. Leadership, I've given you an overview. Human, technological, intellectual resources. Engagement performance. I will simply give few minutes on discussing this. Better will be understood when we'll be attempting a question relating to this. Engagement performance, direction, supervision, review, and EQR. It goes with this slide simply. Direction. For every engagement to be performed, okay. One is firm-wide quality. That's perfectly fine. We should be very much concerned about it. But this engagement performance is the actual deliverable. I give the example to the students. Whenever you go in a restaurant, suppose if the ambience is very good, environment is very good, waiters are cooperative, atmosphere is chilled, location is convenient, everything is very good. But when the food is served, it's not tasty. Will you go there again? Answer is no. So this is basically the actual meal, full course meal. This is the actual delivery. This is the actual service which you are providing to the client. If everything is good, quality of the firm is good, monitoring process is best, technological tools are best, but the engagement performance has been pathetic. Waste. So engagement performance is very important. Direction should be set initially. Who will perform which work? Senior experienced team members will perform this work. These are the timings. These are the deadlines. These are the resources. These should perform these tasks. Technical tasks should be given to senior persons. Easy tasks should be given to the junior persons. Direction. These are the risky areas. These are the less risky areas. You should devote more time. You should perform more procedures on these areas. Direction. Supervision. we have de-lined the task to the staff. They are performing the procedures, they are carrying out routine activities, but there should be someone who should supervise their activities. There should be someone who should guide the juniors, who should keep track of their performance. Are they doing right or not? Are they taking proper evidences or not? Are there any problems which need to be addressed during the course of audit engagement? Supervision. There should be someone who should be supervising the activities. But suppose we have left them unattended. We have left the staff unattended. Whatever they're doing, no one bothers. They are encountering problems, no one bothers. Supervisor is busy in their other activities, manager is busy, partner is least concerned. Lack of supervision. Because junior staff, the lower level staff may encounter difficulties, may face problems. There should be some senior staff to be supervising their activities, should be guiding them what to test, how to coordinate, how to overcome those problems, things like that. Review. Once the work is done, once the file is completed, once everything is done and dusted, there should be review. Review. Review means senior person reviewing the work of the junior person. It doesn't mean that one junior is reviewing the work of other junior. The senior person should review the work of the junior person. There should be a manager review. There should be a supervisor's review. There should be partner review. Suppose if no one is reviewing, everyone is least concerned. Problem. Quality of review is lacking. Then comes engagement quality review. What is that? This is done for compulsory for listed entities. But suppose if there are risky entities, there have been risks associated in past. There have been significant risk of material misstatement, risk of fraud, complex entity, public interest entity. Public interest, it's must, but for others, you may do it, you may not. But if it's a complex entity, significant judgment, significant estimates, have EQR done. What is EQR? Engagement quality review. A senior partner another senior partner in the firm, or it may be a partner from another firm as well, who will be reviewing the work before the audit report is issued by the partners. They will look at the key judgments made, significant areas, planning considerations, completion considerations, everything. Will give input. If there are some lackings, he will suggest do it, complete it, then go for audit opinion. Are you getting this? So I've given you a brief overview of all these engagement performance parameters, which you can find here as well. Are you getting this? Okay, so as far as the post-issuance review, cold review, hot review is concerned, a review which is done before issuance of the audit report is called hot review. That's called hot review, pre-issuance review, and the review which is done after the issuance of the audit report is called cold review or post-issuance review when the report has been issued. Obviously, pre-issuance review is very, very relevant because there might be some aspects which might be untapped and identified. There may be some issues which may require further deliberation so that our opinion shouldn't go wrong. Okay. So what's the purpose? To enhance the quality of assurance work. But here in this case, the opinion is given. Now the firm is purely interested in identifying the lackings post-issuance. Are there any policies, procedures which have been missed? Or there has been any lacking documentational issues, things like that. Which files, listed claims, public interest engagements, a particular risk, as I already told you. And the rest is very simple. You can go through, we've already discussed. Okay. So this is all about engagement quality review, the key aspects. Okay. There is a clash point. Okay. There is no point of clashing with each other because they both are working towards the common objective, and that is upholding the quality. Are you getting this? So if the EQR identifies any concern, he will highlight the concern. The final say lies with the engagement partner because he's the one responsible for the engagement. EQR will give this suggestion, EQR will propose the suggestions. The final say is the engagement part. Are you getting this? Okay. So let's keep our discussion till here. We've discussed in quality and performance management, and we will do the rest of the discussion tomorrow, which is again very, very important. Planning and conduct of the audit, review, other assignments, and things like that. See, let's see to whichever extent we may reach, but we will try to complete our discussion so that we can start practicing from day 3. Dear students, if you have any questions, any concerns, please let me know. Anyone, you're more than welcome to have any comments about the session, about your experience, or any query. You are most welcome to have your say. Thank you, Sharia. Okay, so dear students, thank you so very much. May Almighty bless you all. Take care a lot and do attend the remaining sessions. These will give you a very good insight, a very helping hand in preparing this subject. Okay. Thank you very much. Take care a lot. May Almighty bless you all. See you tomorrow. Bye bye.